Hello, ladies and gentlemen. Greg Mikulowski with the Kickstart video for Monday, January 22nd, 2024. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, dollar versus yen, sterling versus US dollar. So let's get started. Looking at the 4-hour chart of this currency pair and trading last week, the high price was reached on Monday, and then we trended to the downside, finding support against the 200-day moving average. That's a green line in this chart, the overlay line on the 4-hour chart. The level comes in at 1.0844 currently. But on Wednesday, the price came down to that level, moved about 4 pips below that level before rebounding back to the upside. And then we moved back down again and retested that moving average line again right here. And once again, found support into and then rallied into Friday, closing up not near the highs, but near the high of this swing area through here. This swing area comes between 1.0878 and 1.0894. A number of different swing lows and highs going back in time. And the price sort of stalled at that level or just above that level, it looks like. In Asian trading today, the price moved higher initially, moving up to test this low price from the previous week. This is the low for the previous week. Found willing sellers and pushed back down to the low of this swing area. So there is we're off to a fairly quiet start to the week, but the resistance against a low from prior week and a support against the low of a swing area is so far holding the range that it ranges between 1.08788 and 1.0909. Fairly narrow trading range to start the Monday, but what traders will be looking for either a break to the upside. If it does that, we're going to need to get back above the broken 38.2% retracement, and then start to get above these moving averages. This is a 200 bar moving average on the 4-hour chart. This is 100 bar moving average on the same 4-hour chart. Those would be more positive. So 38.2, 200, 100 on the downside, break below the 1.0878 level, and it should open the door for perhaps another retest of that 200-day moving average. Why not? Again, that low comes in at 1.08449. Let's take a look at the dollar versus yen next. And if we look at this from the 4-hour chart in trading last week, the price trended to the upside. Higher. On Wednesday, the price reached into this swing area right through here between 148.45 and 148.59. Found willing sellers, rotated to the downside, and then moved higher into Friday's trading and broke above that swing area. It should open the door for further upside, but that was quickly reversed, and the price started to rotate back down, kind of closing in between the swing area and the 100-day moving average. That's a blue line in this chart here. 61.8% retracement. The move down from this high to this low is also near that 100-day moving average, and I've talked about that level as being the key barometer on the downside for both buyers and sellers. If the price is able to get below the 100-day moving average, get below the 61.8% retracement, this move to the upside would be negated. We'd start to lose some of the momentum from that break, and we could expect further downside filling in with support near around 147.15, and then back down toward this swing area down here near the 146, I don't know, I guess 60-ish type level on the downside, maybe 147 in between. So yeah, but the point is get below the 100-day moving average, 61.8% retracement. That's going to be key. Conversely, stay above, and we'll look toward this swing high, look toward the high price from last week, which also corresponded with this, for the most part, with this high right here. So be aware of that, and then maybe this low right here. So this we had a low right here, a high right here, and a high right here. So get above that level and keeps the buyers firmly in control. Honestly, stay above this level, keeps the buyers in control. We'll see if that can happen in trading today and going forward this week. Let's take a look at the sterling versus US dollar, my least favorite of these major currency pairs. Why? Because the price action has been largely up and down in a very volatile trading type environment. In trading last week, the price did move below the lower of this extreme. This nice little floor right here between 126.02 and 126.13. Fell below that level, should have sent the price lower. It didn't. The price instead moved higher. We traded above and below the or up to the 100-hour moving average here before closing above it, and then moved up to the 200-hour moving average on Friday before rotating back down toward test the 50% retracement of this move up from this low right here to this high right here. That 50% came in at 126,629. As you can see, my price found some support and trading here today. We've seen ups and downs above and below the 200-hour moving average. Do we watch that level as a support? Do we watch 127 as a support? Probably. Um, why not? Alternatively, the 100-hour moving average is now turned to the upside, and the low price for the day came in at 128.84. That level, stalled at this level right through here. It's not really the best of all technical levels, but when you have this ups and down volatility, you sort of look at different levels to give you an idea of what might be working and what might not be working. So that 100-bar moving average is moving higher. If we break below 200, look toward the 100-hour moving average, maybe toward the 126.84. So there you go. I'll look at three of the major currency pairs as we kickstart your trading for this new trading week. Fairly quiet start to the trading week. We'll see how things progress. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.